Good evening, ladies and gentlemen. Thank you very, very much for joining us tonight. I hope that all of you are keeping safe and you're all doing very, very well. It's just gone 7 o'clock and we're going to be starting the webinar. So for those of you that don't know, my name is Ridwan Mullah. I've been involved in the stockbroking industry for well over a decade now. And I've been very, very fortunate to join an organization like Think Markets quite recently. And one of the reasons that I joined this organization was, for those of you that do know, I've spent many years along with Simon Brown. We've been working together to try and ensure that we provide clients with not just education, but exceptional value as well when it comes to investing and trading in the stock market. So with that said and done, the opportunity to join Think Markets came about because of the fact that they align to this philosophy as well. And tonight, hopefully, I'll be able to take you through a lot of things that we are offering, but also to give you the opportunity right now to see why we will be your broker of choice. And it's about rethinking about where you do trade and invest in. Before we though get started with tonight, I still see that there's a few people still joining in, quite a lot actually that are joining in right now. But before we get started, obviously with the trying times that we are in today, first and foremost, again, please keep safe and hope that everybody's well. I know most people would have preferred to have this presentation live, and I would also have loved to have given it live as well. But unfortunately, I can't say today. I hope you've enjoyed the free food. However, with that said and done, just some etiquette on the webinar that we're going to be doing tonight. We will be going through an agenda shortly, but I am going to ask you, if you don't mind, to please keep your questions towards the end of the webinar. You'll find on the webinar that there is an option there which allows you to actually chat. And that doesn't mean that you can speak. It does mean that you need to type your questions in. What I will do is I will be giving time to a question and answer session at the end. However, if you're coming across a very, very important question which you want to ask and you feel that you need to ask it immediately, I do have a colleague of mine, Kia, who will be trying to answer those questions for you if you do ask them while we are going through the presentation. Okay. So with that said and done, let's get into tonight. For those of you that don't know, this is actually the very first time I'm doing a webinar like this without a live audience. So please, I would really appreciate any feedback. And if I do make any mistakes, I apologize in advance. But if for any reason you do get cut off from the webinar, or if I also get cut off for any reason, please do me a favor and just re-click on the link that was sent to you, and you'll be able to then join back in again. All right. So what are we going to be talking about tonight? Well, tonight we're going to be going through a few things. We're going to be going through wealth creation. We're going to talk about risk. We're going to talk about strategy. I'm going to give you some trading tips. And then I'm going to go through why Think Markets is going to be the broker that you're going to be choosing to trade with and also invest with, which we'll talk about afterwards as well. But the most important thing that I want to get out of tonight is to just give you the basic understanding of trading and how all of this plugs into your investing as well as your savings as well. So let's start with the very first one, and that being wealth creation. Now, many of you would have heard, or many of you already have potentially in long-term investing products. Some of you may even have some savings products. And over the years, myself and Simon have spent a lot of time helping people to invest in the long term. Investing is most probably one of the key components of this, what I refer to as the trifecta of wealth creation. But having said that, what we've also found over the years is that many people forget about the other two, being trading and savings, and how that all contributes to this massive thing called wealth creation. So let's just start maybe with savings. And as all of you must probably know and can also read on the notes on the side of the slide, savings is really and truly all about you saving money in typically in a normal interest-bearing account But the main reason that we always have savings, and it's proven obviously with today's times especially, is I used to always tell people from many years ago is that what you want to try and do is you want to try and have in a savings account at least 3 months of salary or income. And you've got to build that up, because when things happen like it has right now, where we're in crunch situations, there's a lot of people who aren't earning an income at the moment, as well as people getting retrenched and these type of things. That savings emergency fund of 3 months can really and truly help you. It'll help you in the sense that you don't have to then be forced to sell any of your investing products or to cash in on anything else. It gives you a bit of leeway. But the thing is that for many people, trying to get to this 3 months worth of savings can take a lot of time. And today what I'm going to do is I'm going to use an example, if you were just starting out, to explain how this savings, your investing, which is your investments in shares, in exchange traded funds and the likes, your long-term investments, as well as your trading, all complement each other. So let's say I'm starting out and I'm earning, and by the way, for those of you that don't know, I love using round figures. I'm not a mathematician, so that's the main reason for it. So let's say I earn 10,000 Rand a month. And from that 10,000 Rand a month, I'm able to put aside 1,000 Rand a month, which can be used for savings, investing, and or trading. How do I then actually build this entire trifecta, so to speak, going forward? So what normally people would do is they'll say, well, I need to get to 3 months worth of a salary savings just to make sure that I have some income protection. And what we then do is we start pumping that 1,000 Rand every month into just savings. But that's going to take us 30 months. And in that time, obviously, it will mean that I've lost out on opportunities in investing. I've also lost out opportunities in trading as well. So what it means is that we have to look at a balancing act, as I referred to. And that balancing act comes in as follows. If I've got, let's say, 1,000 Rand, well, what I would do normally is I would then look at splitting that. And this is all dependent on your strategy and your risk profile. And we'll get to that shortly as well. But just a nice example, just to explain how these three interlink. What I would do is I would then say to myself, okay, first and foremost, what I want to do is, in a trading point of view, I want to have 1,000 Rand worth of capital. And that 1,000 Rand of capital is what I want to use for trading purposes. From an investment point of view, what I want to do is I want to contribute as much as I can monthly, and I want to contribute for that obviously over the long term. And that doesn't have a time frame in. That means I'm going to be investing right up until I get to a point where I can retire and live off that investment. So from the 1,000 Rand, what I would do is I would normally look at splitting it. So I would say, well, this is obviously the big piece I need to get up and running as quick as possible. So I'm going to put more money into this than the other two. So I'll put in 400 Rand into my savings. I'll then invest 300 Rand into equities or exchange traded funds. If I'm just starting out, then obviously exchange traded funds would be where I would start out with. Okay. That leaves me with another 300 Rand, which I can now contribute to my trading capital. So come month one, I'm able to do that split. Now I start trading with the 300 Rand over there. I've got my ETFs there and I've got my cash here. So now I start trading, and because I'm a brilliant trader, or because of luck, I managed to take my 300 Rand and grow it immediately to 600 Rand. So my capital is already on 600 in here. Come end of the next month, what I would do then is, instead of splitting that money of 1,000 Rand that I've got, again, the way I did, well, now this has grown to where I want it to be already for the month. I can then say, okay, no problem. I'll split the 500 Rand into my investing, 500 Rand back into my savings, and then continue trading here. So let's say I have another very good month and my 600 Rand doubles again. And now I'm at 1,200 Rand. So I've also exceeded my capital that I want to be using for trading. What I can do now is, the next month with the 1,000 Rand is, not only can I put the 500 Rand here or 500 Rand in there, but the excess of 200 Rand here, I can now start helping it to fund this portion over here and start getting that 3 months worth of income or salary, getting it to 30,000 Rand quicker. And it applies continuously around like that. There will be times like we've seen now, for example, You may not have that 1,000 Rand obviously anymore. Maybe there's an emergency that came up. You had some sort of an expense, so you couldn't pump in any money into this anymore. The capital year was at 1,000 Rand, but now you've done some good trading and this has gone again up to say 1,200 Rand. Now I can take the 200 Rand, I can put it into there maybe. I can then take even the 200 Rand and continue to add into this, depending on which circle here needs contributions to be made to. I can also look at taking sometimes some of my dividends, and remember the very important rule, don't use all of your dividends. But I can use some of the dividends also from here to maybe contribute to that, so I can build that up, or I can use it even back into that. Maybe my capital here isn't where it should be. But all of these three will then work in tandem for you and ultimately getting you to that wealth creation goal. And that is the key of it, is that we're very good at building our investing long-term portfolios, but we forget to contribute to these other two. And these two are very, very important, because what happens in times like we're seeing today is we've seen a lot of people that have had this built over time having to cash in, sell out, and obviously move their cash across. Now, with everything, and the most important rule out of all of these things, especially these 2 years, stop losses are key. And what has happened, especially over the last few months, we've seen most people in their long-term investment portfolios, stop losses have triggered because of share values dropping and companies pricing dropping and so forth. And what has happened is a lot of clients tend to take now the cash that is sitting in their investment portfolio and they move it across because they need to fund whatever they need to. That should never, ever be the case. The one thing you should always know is that when it comes to investing, the money you've invested needs to stay there, no matter what it's grown to. So if my 2,000 Rand, for example, in year had grown to 4,000 Rand, and then the market crash came, and now it's only worth, because of stop losses, it's only worth 3,500 Rand, and I've cashed out everything, the 3,500 Rand needs to be reinvested, and it needs to stay here. You cannot be taking capital that you started with and growth from here and putting it into there and putting it into there. This one, you can take profits and you can put it into here or put it into here. But you can never ever take your long-term investing growth and move it across, because it's going to impact us in the long term. Obviously, there are times where we will have to, and that would mean that we no longer, let's say, for example, after 3 months, we're still not getting a sufficient income. We may have to dig into this. Those times can happen, and it's happened to people. And in that case, and in that scenarios, yes, of course, try and take money out of there. Do not go into debt, obviously. Okay. So with that, we'll jump ahead into the next item, which is risk, which is most probably one of the most important aspects when it comes to trading, when it comes to investing and everything else. And this pyramid I've pretty much had up from my very first presentation, which was about 15 years ago. And it describes exactly what you need to be building when it comes to those three circles that we've just spoken about. You've got to have your cash deposit. You've got to have some fixed interest securities. You've got to have mutual funds or exchange traded funds, as we call them here in South Africa. We then go to shares, and then we go to derivatives. The whole point of building this up the way it is here is, yes, your risk is increasing as you go up. But the other big thing about this is that when you build this like this, your knowledge is also being built accordingly. And this you can never ever start here if you do not understand how these work. Because your knowledge then over here ends up being very, very little. And what you then end up doing is you end up losing a lot of money. And what we find a lot in our industry especially is most traders end up wanting to come into the market because they know, well, trading, I can make money out of trading. I think every single person has heard me say this, and you can read many articles that I've written about it. Traders are not billionaires. Billionaires end up being investors and the likes. Warren Buffett is not a trader, he's an investor. So if you want to get to that status, and it's going to take you time, it's not going to be happening overnight. You're going to have to learn to complement your trading with investing with savings as well. And if you can build this correctly, the other big thing it does is it causes something automatically, which is diversification, which we also talk a lot of. And diversification ultimately helps reduce the risk. And it will bring your risk a lot further down. Now, diversification happens in everything that you do. Diversification happens in the shares that you choose. If you can't do diversification, we always tell people start rather at exchange traded funds and then move to shares. Believe it or not, with derivatives, and I'll talk about it a bit later as well, derivatives itself also has a pyramid in it. You can't just dive in and go into the most leveraged or geared product, such as Forex trading. What you want to do is, if you're just starting out, you want to start also maybe CFD shares and the likes, and I'll explain that a bit more in detail. But risk, there's another side to risk as well, and risk is about you personally. What risk can you take? And that question you have to answer. You know yourself better than anyone else, and you've got to be able to understand the risk you're allowed to take. And that risk, when I refer to it, is your own personal risk, emotional and financial. Emotional risk, if you are the type of person that is literally going to destroy yourself mentally because you've lost money, then my suggestion is don't ever go into trading. But if you are the type of person that knows I can afford to manage myself emotionally and understand that when I do make a certain loss, it is what we refer to, and myself and Simon love using this word, called school fees. If I'm that type of person that when I do make a loss, I'm willing to look at it as school fees because I'm going to learn from it, then trading is most certainly for you. You have to learn. You have to also understand that in every one of these items, especially from exchange traded funds to shares to derivatives, there are going to be times you're going to lose money. There are going to be times when you make money. But the most important thing is you need to be able to be in a mental state where you understand when I make a loss, it is not me personally only that's making the loss. It is not me that made the mistake only, but it's about you understanding that the mistake is being made, and there's many others out there that are going to make that same mistake as well. The most important thing is learning from those mistakes. Okay. In trading, though, we also speak about something called risk versus reward. Now, there's a risk-reward ratio that measures the difference between a trade entry point to a stop loss and a sell or take profit order. Comparing these two provides the ratio of profit to loss, or what we refer to as reward to risk. For those of you that are paying attention, yes, I read that very nicely off the top right-hand corner of the slide. And by the way, just before we continue, you're more than welcome to take screenshots of these slides and you can keep them for yourself. You can also, we will be putting this webinar up on YouTube, so you will be able to access it there as well. Okay. Anyway, back to risk versus reward. The whole point of the risk reward ratio is about, when it comes to trading, it's about you making sure that you're making more wins than losses. And it's what is acceptable to you. But today what I'm going to do is I'm not going to be diving into this because there's quite a lot of detail, as you can see from the slide as well. But ultimately it's about how do we also set up the right stop losses and our profits. And just to give you a very, very quick example before you take away, because this is going to be what I call homework for you tonight, and you need to go and learn and you need to go and research it. And the point of it being homework is also so that you start understanding the amount of tools out there at your disposal that can help you and help you to grow as well. Okay. But ultimately, what we're looking at here is making sure, if I were to take it in its simplest form, is that when I get into a trade, what I'm looking for is at the end of the month, for example, let's say I'm stretching it over 30 days, I'm looking to make sure that at least I am doing a 10% return on my capital every single month. So that would mean, let's say I've got 1,000 Rand, I've used 1,000 Rand for trading, The first time I make a loss, second time I make a profit, third time I make a profit, fourth time I make a loss. At the end of the month, though, what I'm looking for is a 10% return. So did I increase by at least 100 Rand? And that's ultimately what we're looking for in its simplest form when we talk about a risk-reward ratio. The most important thing, again, and I'm going to be saying this quite a lot through tonight, is stop losses are the most important thing. They are going to save your capital. Okay. But I'm going to urge you to please take away from here, go and do some go and do some homework, go and practice, and go and learn what these things are all about. It is the only way you're going to learn. By me just telling you every single thing, you are not going to learn that much. We will also be having webinars and that there, which I'll talk about later, to help you a bit more with these things. But for tonight, what I would like you to do is step away from here after this webinar and go and do some homework on risk and reward and understand how it works in trading. Okay. So with that said and done, let's get to strategy. And strategy is one of my favorite things. I've many a times explained strategy on how it works in investing. And believe it or not, strategy works exactly the same when it comes to trading. There's a few more different elements to it, but what you want to do is get a very good strategy in place. And once your strategy is set up and the plan, your trading plan is all created, you want to stick to it. You don't want to divert from it. You need to stick to your strategy and your trading plan, and it is essential for you to set one up. So what do we mean by this whole strategy thing? All of these things that you're seeing in front of you, from risk to technical analysis, stop losses, all of that is part of your strategy. And you need to encompass all of these things in order to make a successful strategy. Now, no one can tell you what strategy is right for you. You have to do this yourself. But to give you an example of how best strategy works, strategy, what I normally do is, from my side, I look at myself. I first look and I say, okay, let me have a look and see where's my education level at. What do I understand? Well, I've been investing in the stock market for very long. I've got very good shares, which have been doing very well. I have very good knowledge of fundamental analysis. I'm not very good at technical analysis, so I've got good fundamentals. I know how to do research, especially when it comes to fundamental analysis, and I've been doing it quite well with my shares. So those are the three, that's where I am for those three over there. With that said and done, obviously I'm entering into trading. Well, because I understand shares quite well, what I would do is I wouldn't just jump into FX. I'd rather look at CFDs, equity CFDs or share CFDs, okay? And many a times what people do is when they start trading and they're going into trading, what they do is they look at their portfolio that they have. So for example, let's say I own MTN shares, or I own Sasol shares, but I only recently bought the Sasol shares when it was at 30 Rand. Let's pray that I did that. But however, let's say I've got MTN shares. So now I know quite a bit about MTN because I own the share. I've obviously researched it. I know the sector as well. So I also know what's impacting MTN. I know what isn't impacting MTN. I know the fundamentals around this company very, very well. So what I do then is, if I'm going to go into trading, I'll start with looking at trading a CFD in MTN. That way, I've already got the base when it comes to understanding the CFD share. I also know what it is that I need to be looking out for. Then comes the next question, is about how much of capital can I put in? Am I going to top it up every month? Or am I just going to put in once off an amount? And that's going to be my trading capital, which I'm going to use going forward. Again, like I said, you use that capital, the profits and the likes, you may be using that then to also offset whether or not you need to increase your savings or you want to put some money back into investing. But you need to decide on your capital amount that you want to get to and what it is you're going to be starting with. And that's where you're going to start. If your capital amount is quite low, then that means you can't just go into a whole lot of different CFDs or into other different products. You can't, if you've got 500 Rand, for example, then I wouldn't be suggesting taking 500 Rand and splitting 250 Rand into FX trading, 250 Rand into MTN, and MTN CFDs, I would look at then rather focusing just on one instrument, and that would then be the MTN CFD. Okay. Once that's all done, I then need to obviously understand my risk. I need to do my calculations for my risk reward ratios as well. And that means then I am ready to understand and how to place a trade. And also when I place a trade, the very first thing, and you'll see this with every single trade that you put into the market with Think Markets, the very first two things that we ask you for is, what is the stop loss and what is your profit that you want to take? It is, if you do not want to put in a profit, that's perfectly fine. But the most important thing though is put in the stop loss. If you do not put that stop loss in, you can get blown out. And we've seen this happen. You'll also see on most of the pages that we talk through right now, and with any broker out there that offers derivatives trading, there's always a warning. It says you can lose more than you invest in. And what that actually means is that when you put your money in, as much as we are very, very tight and very strict with our, what we call an auto closeout. So for example, let's say you put 100 Rand in with regards to margin for a CFD, okay? And you start in the morning at say 9 o'clock and you place your first trade. And during the day, what happens is that the share plummets, it's gone the wrong way for whatever reason. We would say normally, well, let's say at 50 Rand, we will close you out. So if your margin drops or if your losses are then 50 Rand and you get to 50, we then immediately close you out. So that means your capital there is still a bit protected. However, let's say you were at 51 Rand. So we didn't auto close you. You were still above that threshold and you're at 51 Rand. Overnight, the market really and truly tanks because for whatever reason, something happens with MTN or whatever the case may be. Sorry, excuse me. What happens now, 9 o'clock in the morning, the share opens and you've now made a 60 Rand loss because the share price has dropped that much. That's the only time that you are then going to be losing more than your capital. That means then that you're going to be owing us 9 Rand. We at Think Markets, we're in the process of looking at how we can actually even mitigate that for you as well. But in the interim though, with the way markets are swinging, it is not there. So you could potentially then lose that. And that is what is meant by that. So you've got to be aware of those things. And you've got to also understand that that stop loss then may not work when it is exceptionally volatile like that. So keep it tight. You want to keep it as tight as you can, your stop loss. But you want to make sure also that you understand that there are these type of risks that can happen. Okay. Last but not least, you've got to keep track of your profit and loss. Like I said, there's a goal that you want to achieve and you've got to keep track of it and you've got to make sure that you're looking at it. Now, that does not mean that you are sitting 24/7 in front of your PC. If you're going to be sitting 24, I always say to people, the very first thing that happens when you place your first trade, you are going to be staring at that screen without fail and you are going to watch this thing, your P&L, because we give you a live profit and loss all the time. And you're going to watch this profit and loss continuously the first time you place your trade. Don't stress, it is normal. You'll soon understand that because you've put in good stop losses and you also can make use of systems that we have like alerts or alarms as it's called on our platform. You don't need to be there 24/7, but you do need to keep track of things as well. Trading is not about holding something for a week, 2 weeks and the likes. I always say to people, the only time you should be holding something for a week in trading is because the share or whatever it is that you're trading in, the instrument, is doing a very good run upwards or in your favor. Remember, with trading, though, you can go what we call long and short. And if you're on the call and don't understand long or short, don't stress. What you can do is Google it. Okay. And you're going to find Google is going to become a very good friend of yours when it comes to trading. All right. But that's strategy. Last but not least, we're going to talk about quickly trading tips. And trading tips literally is what we've just spoken about now as well. So it encompasses all of these things. The first thing that we're going to talk about is learn the rules of the market. You've got to understand what you are trading in. You've got to understand how the market works. You've got to understand the jargon. And for 15 years, I've been telling people the easiest way to find out what jargon is Google it. Don't be scared of it. If you don't know what something means, go onto Google, type it in. You'll get definitions for it without fail. And you'll get an understanding of things. And like I always say to people, you're coming into a trading environment right now. So you're going to need to learn this. Like you had to learn when today you connected to the internet, you most probably either connected via ADSL, and that would be the least amount of people now. But many of you will have fiber, others will have 5G. Maybe you're connecting via your cell phone through 4G, whatever the case is, or LTE. All of those acronyms, most of us don't even know what they stand for, but we do understand what they actually do. And that's the point, is that you're coming into an industry, you're going to need to learn what they at least do at bare minimum. Okay. The next step is create a trading plan. We've spoken about it right now with regards to have a strategy, have a trading plan. Those are very similar things. Understand where your entry points are, exit points are going to be. Where exactly, what is it that you're trying to achieve? What is the research telling you? Okay. Get a proper trading plan. If you don't know how to, or what are the factors to take into account, and you're not happy with what I've spoken about, Google it and see what people have done. There's many examples out there of trading plans. Do not copy a trading plan because it may not suit you. Please always try and create your own trading plan. Okay. The next step is to test your plan. Now, for many people, a lot of people love doing is they rather open a demo account and then they practice their trading plan through that. I'm not against it, but I'm one of those people that don't believe it actually adds that much of value. And the reason for that is because, as I said earlier, we don't pay school fees with a demo account. For me, I always say to people, if you are going to start trading, well, start with small amounts. Maybe start with the 500 Rand. Put the trade into account. And I'm going to show you tonight that you can actually start with 500 Rand. Even less sometimes, depending on what you want to do. But start with something small. You may not make a huge profit, but you're going to see whether your trading plan and your research and everything else is working as well. But you have to start. And for me, it's about starting with rather your own money that you can put into it. And remember, like I said, it's about the fact that it's money that you can afford to lose. If you lose it tomorrow, it is not going to impact you from buying groceries, paying a bond, paying medical aid, or anything else. Okay. It's money that you know you can afford to lose. And that's always the case with trading and investing. That's the risk. Okay. But for me, like I said, you can start with demo accounts. I prefer to always tell people, start with live money. You will learn a lot more because it's your money and you're going to make sure that you're going to do everything you can to protect it. Demo accounts can help, but for me, like I said, live accounts work a lot better. Always make an informed decision. And that's whether you are buying or selling, whether you are closing out or you are going into a position. It cannot be because, you know what, a friend of mine told me that Sasol, the share price is sitting at 35 Rand. It can never go further down. Now, believe it or not, that is actually a very true story. I was just when Sasol had actually dropped quite a bit, I had a friend of mine say to me, you know what, I'm buying Sasol shares right now. And I said, why are you buying Sasol shares? He says, no, it can never go lower. This is like the lowest it will ever go. And without fail, it did go lower. And it went into the 20s, if we were to recall correctly. That is not an informed decision. An informed decision is one which is based on research. It is one that is based on understanding what is impacting Sasol's share price. Is it just to do with its investment in the US, or which is costing a lot of money, or does it really and truly have to do with the fact that the oil price is just plummeting? Make informed decisions when you're going to go into a trade or you're going to exit a trade. Okay. Then we talk about know your risk and reward levels. Understand what stop losses need to be put in, and also stop profits as well. A lot of people forget that. You know what? Sometimes you're going to buy into, and we'll use Sasol again. Sasol had a beautiful run. I mean, it ran up all the way through past the 70 Rand mark. And let's say I was in the share at 35 Rand, just argument's sake. But what it did is it didn't just go from 35 and continuously just climbed up to 70. It went up 35, it went to 40, but it came down to 38, and then it went up to 45. What you need to do is cash in at 40. Take the profit at 40. Came down to 38, okay. Then you can go in again, maybe at 42. All right. Or you can adjust your stop losses as well. And with the systems that we have in place, it's actually so easy to adjust it. You can do it all on the graph as well. But you've got to be able to know that there are some points, don't be too greedy. Let it run when it's running, but make sure that you're adjusting your stop loss then as well. Okay. Entry and exit points. Before you enter a trade, you have to know what your entry and exit point is. You've got to have that set up and you've got to stick to it. If you're going to exit, and entry and exit, what we're talking about more there is your stop loss point. Do not adjust a stop loss point downwards. And what I mean by that is that if the share is falling, and you're in a long position and the shares you've bought at 100 Rand and the price is down to 90, you know what? Your stop loss was at 90. Let the stop loss trigger. Do not sit with the fact of going, okay, you know what? I'm going to adjust that stop loss to 85 because I know it's just going to go to 86 Rand and then it's going to turn. Please do not do that. Stick to your entry and exit points, especially for the stop loss. Okay. And really and truly, the whole point of all of this is that we want to get you to a state where you avoid what we call the emotional roller coaster ride. And many of you have seen that emotional roller coaster ride where your first trade, you go in and the price is all the way up and you're all joy and happy and everything else. And the next thing you know, it starts plummeting and you've got no stop loss in and you just let it run and it goes right down to the bottom. And then by that time you get closed out and everything is just looking bleak and you just want to crawl up in a hole and die. And then suddenly the share starts going up and then you start buying again and you go through that whole roller coaster again. Avoid the roller coaster. Stick to your trading plans. Stick to your stop losses. Stick even to your stop profits if need be as well. Okay. Know yourself. Make sure that you understand where you are. The strategy is about understanding where you are. The trading plan is about knowing yourself, knowing what is the risk you can take, what you don't want to be doing. And like I said, if you really and truly know yourself, you'll also know if trading is for you. Discipline and consistency, it's key. Know that you will win and you will lose some. You're going to make some profits and you're going to make losses. Just make sure that you're not eroding your capital. Adapt to change. You can't always use technical analysis when it comes to trading. You need to understand how to move through them. Last but not least, fees and costs. It's easy to move between brokers. You may not be able to move your portfolios just like that, but when it comes to trading, it's a lot easier. If your broker's charging you too much, move to the cheaper one. Make sure your fees and costs are always in line. Okay. Last but not least, just start with a repeat. Okay. The next slide is just pretty much literally just to reiterate what we've been speaking about, but also just to show you what we mean when we say protect your capital. If you're going to lose 50% of your trade, the share needs to literally go up by a full 100% for you to break even. So understand that. And I've also just given you some more information on trade expectancies and these type of things. And by the way, this was actually from a colleague of mine. This isn't my slide. This was actually information from a colleague of mine. And that's a very important thing as well. Connect with people in industry. Connect with people who are putting out good information on trading and the likes. People like, for example, and I'll tell you who this is. This was a colleague of mine, Robert van Eyden. He's been doing some fantastic notes and updates on LinkedIn with regards to rules and learning of trading. So partner with people in industry. You may have friends and colleagues who are very good. Speak to them. Hear what they can give you. It's good to get help, but help in the sense of knowledge. Please don't get trading tips from people because like I said, most people are wrong when it comes to the trading tip unless they've done the research and they can show you that as well. Okay. But just to summarize what we've been speaking about tonight, protect your trading capital, stop losses. Use tools at your disposal. There's many tools out there. Use them. When things are going your way and you are in there, act aggressively. Adjust your, be involved in it. Adjust stop losses if need be, if it's going the right way. Okay? Don't be afraid to sell. Learn that you've got to be patient, you've got to be persistent and methodical. Never stop educating yourself, and don't ever be overconfident or greedy. Okay. Now, with that said and done, just to go back to the products, and these are products that are all on offer with us as well. For me, you'll see, and going forward, there'll be webinars, like I said, coming up with Simon Brown. You're actually all going to be getting an email to attend these webinars. We're going to be running them weekly, every Wednesday. They refer to the trading masterclass webinars, and they really and truly are just that. It is to help you understand trading. And we start with teaching you instruments. So we're starting with the one which we, like I said, is most probably, if you look at derivatives, your least risk from a derivative point of view, CFD shares. We move up into indices, commodities and precious metals, currency pairs, and then last but not least, cryptocurrency. That's the triangle that you can look at starting to build when you move into trading. Please always remember to ensure that your investment portfolio is also growing over time. Okay. And when it comes to CFD shares, well, we offer you over 1,200 shares listed worldwide that you can actually trade in. If you are new to trading and you're starting out, stick to the South African ones. Like I said, follow the ones potentially that you already own as shares. And you can then look at trading them as CFD shares as well. It'll really help you. Okay. So in the closing time that I have left, why do you want to be with Think Markets? Now, one of the key things of Think Markets is that, first and foremost, as it says here in the slide in the bottom, we are an authorized financial service provider. Now, there's many people out there that talk about that. But the one thing that we don't understand of trading is that we are actually taking on risk with the person we're investing, and it's called counterparty risk. Think Markets has really and truly gone above and beyond anything. Forget the fact that we are registered with the FSCA, we have our category licenses and all of these things in place. We adhere very, very strictly to the rules of not just South Africa, but of the UK and the AU. We then went and took out insurance with Lloyd's of London, where we said, you know what, we want to ensure that not only is our clients' money kept in a segregated bank account, but also we want to protect that. And what we mean by that is counterparty risk. When you trade with a broker, whether that be an FX broker or any other derivative broker out there, when you trade with them, your money sits with them. If that company tomorrow does not exist, you become a normal creditor. That 10,000 Rand or a million Rand that you've put with them, whether that be sitting in the segregated bank account, it doesn't mean anything. It means literally, though, you become a creditor still. What we've done is we've gone and made sure that we've protected our clients, that every single client, including South Africans, carry a full $1 million worth of insurance. And what that means is that if you've got up to $1 million with us as deposit in our segregated bank accounts, and Think Markets tomorrow does not exist, you are guaranteed that full $1 million back. You do not become a creditor, it is immediately paid back to you. Now, I can tell you right now, being in this industry and having worked for exceptionally large corporates, not a single one of them have that protection on your deposits that you have with them. And that is the reason why I said Think Markets right in the beginning. I said was probably one of the best brokers that I've ever come across, because they're there not just to look after our client safety and security, but we go a step further to make sure that your money is also very well protected. The next thing that we have is that we are also a multi-regulated broker. Like I said, we're not just regulated here in South Africa, we're regulated in the United Kingdom, and we are regulated in Australia. We have people who trade with us from over 180 countries. We also provide 24 hours, 5 days a week support. The South African office is set up, and our address, I will give it to you even, is at 96 Rivonia Road. Our client support team sits there. They are available from 8:30 till 5 o'clock in the morning. After that, Our teams in Australia and the UK all supplement to help you after hours as well. As I said, all clients' funds are kept securely in segregated trust accounts. But like I said, we also make sure that we carry a full $1 million insurance for you as well. Okay. The other piece that we've done exceptionally well is technology-wise. And the ThinkTrader app, I know that we also do offer, by the way, MT4 and MT5, but ThinkTrader is going to be your choice. I can guarantee you that, and I'll also tell you about that shortly, why it's going to be your choice. But the ThinkTrader app is really and truly something else. Technology-wise, it is well advanced. You can do every single thing there, from having graphs. You can have 4 graphs. You can do your technical analysis. You can have, and it's all live, by the way. You have live prices coming through all the time. But one of the key features that I personally love is what we call the trend risk scanner. And it finds high probability trades and recommends your target and stop loss levels with a very powerful risk management tool. You can literally, if you go to the trend risk scanner, it will tell you exactly, if you're going to buy now, it will immediately set a stop loss for you and a stop profit for you as well. You can adjust it as well if you want to. But it already sets it up for you. So it's given you ideas of exactly how things are working, what is a buy and a sell, whether you should go long or short. It's all there for you. And it's a very, very powerful tool that you can use as well. And that's available on ThinkTrader. Last but not least, we also want to make sure we take your trading to the next level. Like I said, we've partnered with Simon, and I partnered with Simon because I know the value that Simon offers. And we're not charging for education. We are not like any broker out there who tells you we're going to give you free education. And then what we end up doing is we say to you, yeah, you can only get free education if you do this, if you do that, and so forth. Simon will be emailing you as well as us. We will email you as well the upcoming webinars that we're going to be running. And they're going to be once a week at least. We're going to be doing a lot more as well from an education point of view. They're all free. There's no catch to it. You don't have to be a client with us. It is there to help people educate themselves and become smarter and better traders. On our website at thinkmarkets.com, you can learn a whole lot more. You can download those guides from there. We also give daily market updates. It's for free. You can just go to the website and you can get it. We'll be now focusing on South Africa as well. Currently, we do the US, the UK, and the likes, and we'll be soon coming up with the daily market update for South Africa as well. Okay. Now comes the big reason why you should be with us. Value and low fees. For the last 15 years, I've been sitting and trying to make sure that we find the right provider for clients. And today I can tell you that we have, because whether or not I'm here or gone or whatever, the CEO all the way down has subscribed to this. You can trade the ZAR 40 index. We do not charge any common brokerage with it. You can also trade that index right up until 11 o'clock at night. Obviously, after hours, the spread does become wider, and we're open about it. We're not lying to you about it, okay? But that's because the market's obviously closed and we're following international markets then. From a CFD point of view, if you trade the SA CFDs, we charge 0.2% with a minimum of 75 Rand. And because of us wanting to make sure that you can start learning how to trade with small amounts, we are canceling the 75 Rand. That means you can trade CFDs, SA CFDs, equities at a brokerage of 0.2%. That's it. Which means literally, if your exposure is 100 Rand, yes, you are paying 20 cents. So you can literally buy one Sasol CFD and that put down, and you can put that, I mean, right now, whatever the price is, let's say it's at 50 odd Rand, your margin will be 5 Rand because all our instruments are geared by 10 times. So we have gearing of 10 for all our CFD equities. And that means you'll put 5 Rand down. So you could literally trade with 10 Rand. Okay. And we will not be charging you the minimum of 75 Rand. That'll be for the whole month of April and May. Like I said, you can trade in the ZAR, you can trade in the pound, the euro, the USD as well when it comes to an FX point of view. And then you can also fund your account in various ways as well. We can fund your account through what we use, card pay, Or if you want to use the usual EFT, I see that I've once again put it up as ETF, which is exchange traded funds. My apologies. Just goes to show you the jargon between stockbrokering and banking. But anyway, you can transfer it electronically to us as well, and you can get our banking details as well. But ultimately, that is how good we are doing it and how much of value we want to offer you. You will get all of those things, and CFDs for SAs will be at a brokerage of 0.2%. But that's just a summary of everything that we offer with regards to this year. So with that question, the last thing, I mean, with all of this here, obviously the big question is then, how do I actually open an account? Opening an account with us is actually so simple. 10 times easier than virtually anybody out there as well. The way you can open an account, you've got two ways. Number one, go to www.thinkmarkets.com, click on create an account, and you can then follow the steps online. Alternatively, download the ThinkTrader app. And if you download the ThinkTrader app, you can then from there create your account, upload your FICA, and your FICA can be from a photo as well. We accept those things. We do full checks and everything behind there. Once that is done, if you have the app and your account's approved, obviously you'll be able to see that immediately on the app, and you can literally fund it directly from your app, your account. So you can go to CardPay and whatever from the app. Alternatively, we have a Think Portal website. If you go to thinkmarkets.com, top right, client login, select Think Portal. You will get all of this in an email, by the way. You'll use the username and the password that you create. And you can then obviously fund your account from there. You can even create more live accounts from there if you want to as well. Please note just one thing before I forget, the CFD offering where you are getting charged only 0.2% is only available through ThinkTrader. If you open up what the MT4 or MT5 account, you will not be charged that brokerage. The brokerage is only through the ThinkTrader website or app. Okay. All right. Just a quick overview of exactly how the funding works on the app. As you can see, simple as can be. Click deposit funds. You can choose bank wire. You can scroll. You can do it via your credit or debit card. We only currently accept Visa cards, by the way. Alternatively, you can do a local bank transfer. It's our accounts, obviously. But this is the exact steps to actually fund it with your card. Simple as can be. And those are all the wonderful other ways of doing it as well. Okay. So with that, what I'm now going to do is we're going to jump into some questions. And I'm going to be looking right now to have a look and see what questions we actually have available on there. Okay, so let's start with the first one. I see somebody wants to know, do you offer the SA index for trading Aussie? The answer is quite simply is yes, we do. We have the ZAR 40, so you can trade that. The ZAR 40 does not, there's no brokerage or com with it, and we track obviously the futures market with that. Okay. The next one is, do you allow mini and or micro lots? Yes, we do. In fact, we allow mini in indices as well. What that means is that if you want to trade, for example, the ZAR 40 index, and you don't want to take out one contract, you can take out 0.1 of a CFD on the indice as well. And that is throughout all instruments, except for obviously CFDs. CFDs and the likes, you can only do one contract, CFD shares. Okay. What is the average spread on the top 40? What would the margin requirements be? So let's start with the first part, the average spread on the T40. Well, we try and keep it as tight as we can. It depends at this moment in time on the volatility also on the market, but it does not exceed 25 points. That's also after hours as well. So we try and keep it as tight as we can, but as you all know, with the volatility around in the market, those spreads have widened. Everybody has widened it, even in the futures market. What would the margin requirements be on the ZAR top 40? It is again 10%. So 10% of where the index is. So for example, if it's at 40,000 points, you would need 4,000 Rand for one contract. If you're going to take out 0.1 of a contract, you're going to need 400 Rand. Okay. Can you trade international CFDs? Yes, you can. We have over 1,200 CFDs. Now, that's actually quite a good question. The way you need to work this is quite simple. If you're going to be trading South African CFDs, open a ZAR account, ZA as in a Rand base currency account. If you're going to be trading instruments like the NASDAQ, you're going to be trading a CFD in Apple, a CFD in Google or Amazon and the likes, please open a USD account. You can have a ZAR and a USD account, and you can switch between the two as well. But my suggestion for that is because if you have a ZAR account and you trade a USD instrument, we are converting your rands to dollars, and there is a 3% charge on that transfer. So rather, make sure you got a rand account and a USD account, but you can trade international CFDs as well. Who are the owners of Think Markets? So Think Markets is actually owned. There are two founders and CEOs of the business. Those two founders and CEOs, you can actually read up more about it on the About section. They are two brothers that started this business. It's been well over 10 years, and they've been doing exceptionally well, and they've established it very well throughout the country. The other two, throughout the world. The most important thing that I've learned from the two of them is that they will not do anything that is even on the gray line when it comes to regulations and the likes. Okay. Is the CFD SA 0.2 offer only till the end of May? For now, we are running it till the end of May. It could very well be extended as well. The other thing also is that we will be looking at extending the current offering, the SA CFDs. We currently have 36. We are looking obviously to extend that, and we're hoping to have the top 100 pretty soon as well. Is the live share prices free, or do you have to pay a monthly fee? We do not offer equities at this moment in time, and I'm going to say this to you because you are very good followers of Just One Lap. We are looking to introduce equities potentially with our offering as well. For now, though, derivatives live prices, you do not pay anything for viewing live prices, and the live prices are streamed through to you. We cover the cost of that, and I can tell you right now on SA CFDs, yes, you do have to pay the JSE for those live prices, for the ability to display those live prices. So the live prices are free. There's absolutely no cost. There's also no monthly cost to your account. So you can have the two accounts that you want. There's no monthly fee to it as well. We do not charge any additional brokerage fees or any other hidden costs at all as well. Okay. So to answer, there's a question with regards to what are the spreads on major indices, example, the DAX and the Dow, and I'm going to take this as the last one. So those spreads can be as tight as 4 pips, literally. They can go down to almost 1 as well. It depends on the actual liquidity. It depends obviously on the volatility and the likes as well. But the spreads, we keep them exceptionally tight. We're one of the, and you can compare them. You can actually compare to all other people out there as well. And you'll notice that our spreads are most probably the tightest around at this moment in time. And the reason for that is because, again, we are trying to make sure that people do not incur huge costs. Okay. So with that, ladies and gentlemen, I'm going to say to you that we are hitting the end of this webinar at 8 o'clock, and it is going to be switching off pretty soon. Whatever questions that you do have, I'm going to ask you, if you don't mind, you can email that through to our support team. You can also, if you go onto our website right now, you can actually engage in a live chat, and we will get to that as well on the live chat. So we are still open. So if you go onto the live chat and you do ask your questions, we will be able to answer it for you there as well on the website. But like I said, right now, my advice to you is really and truly start thinking about who you're trading with. And if you look at the costs, especially, and I'm going to be very honest, I've worked with the blue, the red, and the turquoise people out there. And I can honestly tell you right now, you're not going to get an offering better than this, which is safe, which is secure, which is regulated, and it is something which is going to help you in the long term. Please, once again, be safe. Please look after yourselves, and we will definitely be chatting soon again. Please look out for the webinar email that will be coming out tomorrow. You will be able to then subscribe to Simon's webinars, which he will be starting on the 6th of May. And if you want to open an account right now, and if you have any questions on it, please, again, join the live chat. You can do it on the website. If you go to thinkmarkets.com right now, you'll be able to see the live chat right there. Okay. Thank you very much for attending tonight, and be safe, and we will chat soon. Take care. Goodbye.